Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on euro currency. So you could see what has happened recently. Inflation was higher than expected, but actually guys, this was not the single reason of the recent dynamic. Probably you know that yesterday it was also publication of the Fed minutes, where the statement and position of the members have appeared to be not really dovish. And finally, third moment that barely has been mentioned in the media is the awful auction for 10-year bonds. It was really very bad auction. Demand was very low, which is actually leads to rally on interest rate yields. So these recent events has made really wide resonance across the globe. So the sell-off started not only in United States bonds, but as we mentioned in Telegram, in European bonds and others. So this really massive increasing of the yields across the board. This is really very significant moment. And from that standpoint of view, you can see what we said yesterday concerning the bearish context. We said we are not considering taking new longs. Here we have only one single scenario for trading immediately. This is the bearish trade on the hourly chart that we discussed recently, and this time you can see that general technical view coincides with the fundamental background that we've got. So collapse was really significant. Now so we could say just two things. First of all, we would like to congratulate those who have taken shorts yesterday. Second, for those of you who are conservative and not prefer to trade through the big events, this time is coming where you could make the reasonable bet on your currency and take in the short position if you would like to, because the predefined conditions for a bearish context now are reached, and we could just easily could start watching for points where we could consider taking the short position. But first, as you could see, I slightly modified the picture on the daily chart. With this recent performance, market is dropping right to this area 107. Here we have to recall the bearish grabber that we have on the weekly chart. Now it stands very close to the targets. It's just below these lows. It should just drop here to test this area and complete the neckline that we have here. Also, with these head and shoulders, I have shown you the target of this pattern, which is might be finalized by the perfectly looking butterfly. From that standpoint of view, you can see that it's in range approximately around 105.20, 105.15, and 105.35 approximately. 105.40. This will be next destination. On the way down, we have also minor target with this initial ABCD pattern on top with the XOP around 105.80. Few comments on recent performance. Here guys, we do not need all the stuff that stands to the left. The only thing that we are interested right now is only this downward action, because from the normal market mechanics, after such as a sell-off, and you can calculate the swings here. So this was the OP pullback downward action. The market should not show any significant reversal and rising above this area, so we would not want to see here the bullish reversal swings. Market has to stay inside of this range, showing some retracement maybe, but later should keep going lower. So from that standpoint of view, from the practical position, we do not need something else. We just need this most resting swing. Another hint that we are getting right now, I will show you on the dollar index. It is not completed totally, but this is at least something to watch for. This is euro currency as well. So on dollar index, this is weekly chart. Take a look. Same ABCD pattern that we have on the on the euro currency, but take a look at this wick that currently is forming. It is not completed yet, but if everything will be over somewhere in this way, we will get bullish reversal wick on a dollar index. It means further dollar appreciation, which really will support the euro currency, or just confirm the scenario that we are considering on the euro currency. Potentially, yes, we could get this big catalyst cheaper to sells at some point, where it might be some even retracement or something, but it's still a long way to go. And from that standpoint, this construction that we have on the dollar index looks supportive for the euro currency as well. Now, speaking about intraday charts, what we have, our market has completed our second scenario. So if you remember, we said if grabber will be valid, grabber will be formed, we're considering only bread and butter trade on this most recent up. Do not make any bet on the further hand shoulders performance. Yes, here was a bit tricky moment yesterday, where market was climbed slightly above the zero, but we have explained this. Besides, this performance was obviously with the bearish pattern on top and has the features of the Russian rinse that we discussed yesterday. And as a result, we said that hand shoulders, well, we will be watching for the failure of this pattern, and now this pattern has failed. So market dropped back to the lows. It means that in recent time, nearest time, it should keep going lower and taking out of this lows to just confirm the failure of this pattern. But before that, as I said, those who haven't taken position yesterday with this setup, now you could watch for some pullback here to consider taking a short position. On the hourly chart, as also we discussed yesterday, this was nicely looking hand shoulders or something of this kind. But now we could consider a few levels. One of them is around 107.80, 85 probably. I think that this is a preferable level, just because downward action just has started. We are not at oversold. That's why in the current circumstances, too deep retracement here, well, do not look really logic. Especially if, as you can see here, we do not have any very significant thrust up. So here was relatively moderate performance. And that's why I think that 107.85, 108, somewhere around these lows seems normal destination of the possible pullback. Here you could suggest that probably we could get some kind of the double repo buy, but guys, formally we do not have it. It's just because this is just 2 candles to the downside. For the double repo, we need at least 8 candles in the thrusting action. But of course, these candles are huge. So, and by the swing, downside swing length, it seems that it might be treated, because it's almost similar as this one. That's very good was for a bread and butter trade. That's why by the nature, maybe it might be some double repo and retracement here, but by the letter, we do not have it, just because it doesn't correspond to formal conditions of the double repo thrust pattern. So that was what we have. We are not considering taking longs. If you would like to, you could, if you trade on intraday charts, if you will find something bullish here. But for our trading plan, this is not necessary. And we're watching any pullback that will happen in nearest time as a chance to get to just better entry on the short side. Supposedly, the first level that we will be watching is somewhere around 107.80, 108, around the A lows. So we will see what will happen.